Hey everyone, welcome to the KE Report in a Daily Editorial on Friday, October 17th, chatting with Marc Chandler. Marc is a managing partner at Bannockburn Global Forex, also editor of the Mark to Market website. Joins us pretty much every week to recap the moves in the markets. And boy, oh boy, we have a lot to talk about today, Marc. We're going to be talking about a correction in some of those high flying rare earth stocks, as well as gold and silver stocks to end the week. A lot of stocks down 10% easy, and the majors also down big. Just ties into kind of this volatility in bull markets and what happens after some price spikes. We're also going to talk US China relations, following up on last week's call that was very highly listened to and watched, that's going on, that was driving the rare earth stocks, and also, again, the tensions between the two countries. And regional banks back in the news, with a couple smaller banks in the US having some issues with bad loans, especially in the commercial real estate department. So, a lot for us to get to, Marc. Let's start off with the metals correction. Rare earth stocks are off of their spike highs. Gold and silver stocks are really correcting at the tail end of this week. What do you take away from this correction, which again is coming after massive price spikes?
You don't know. It's sort of like riding a wild tiger. You don't know whether it's safer to be on the back or jumping off. And so I think that there is a lot of noise here, but I think that what triggered the profit taking is this sense of optimism. Whether it's the belief that Trump will back down, whether there'll be some kind of deal struck between the U.S. and China. I think this hope of a deal, I think, is sort of had filtered through. And I think on Friday, before the market opened in electronic trading, U.S. stocks were called broadly lower. And then around 8 o'clock on the East Coast, Trump had made some comments, again, giving hope that there'd be a deal struck. And the stocks moved higher on that. And I think that helped encourage us further profit taking on these rare earths. But I think that the real message I'd want to give is that regardless of what happens in the short run between Xi and Trump, that the real takeaway is that the US, Europe, Japan are going to have to develop their own rare earth capabilities. And this is going to take years. When China first used its weapon on Japan around 2011, the estimate at the time was it was going to take 5 to 10 years for the U.S. to catch up to China. And here we are, 2025, and we've made very little progress. So I think that if we leave aside for a second valuation of some of these rare earth companies and what we're really buying when we buy them, and think about the industry as a whole and the U.S. strategic move to secure that. Without being able to secure rare earth technology, the U.S. really gives up a lot. We think, and I think I mentioned this last week, we think in the U.S. that we have a supply chain dominance in semiconductors, but China trumps us. They say what you need for the semiconductor chips are rare earths. We have those. And not only of course, do we need the rare earths for the semiconductor chips in AI, but for a whole range of defense things. For example, our latest fighter jet, I had read, has over 900 pounds of rare earths in it. So the U.S. cannot even be militarily secure until we become independent on rare earths. So I leave it for smarter people to figure out what these rare earth companies are worth. What are they really worth, and maybe trying to buy them. But I think that industry, one way or the other, is going to come back to the U.S.
Well, Mark, we follow the space pretty closely here and have for a long time. I remember, like we talked about last time, that this reared its head back in 2010 through 2012 when China did export bans to the US, to Europe, and Japan. And we've needed to hit the go button ever since then. There have been companies working since that time period for the last dozen to 15 years on this technology. And there is a handful of companies that are doing process and separation here domestically, either in the US or Canada. So there are those companies. So as far as evaluation, I guess it really comes down to, do you think that the prices of these rare earth elements stay high? Is there a rationale for this optimism of a deal to be worked out? Because it seems like China is going to keep pulling this card over and over again, and the handful of companies that actually are doing something and have something real and legitimate went up because there doesn't seem to be an end to China pulling this trump card.
Yeah, I don't know. To me, it makes China look like it's being the bully here, and I think, of course, this is the narrative we tell ourselves here in the U.S. But I think that it's not so clear when you really look at the details. I mean, of course, I live in the United States. I'm patriotic. I love America, but at the same time, I realize that the U.S. can act like a bully, and what China is doing. You say, well, China's going to keep playing this card. I say, I don't know about keep playing this card. I think export licensing is different than export controls. What the U.S. has is something on the magnitude of 45 military bases surrounding East Asia. We have been using semiconductor chips technology not only to deny our companies access to the Chinese market, but we've been denying it on a third-party basis. South Korean companies, Dutch companies are limited in what they can sell to China because of U.S. policies. So I think that this is really a clash. I think to understand this is not really taking partisan sides, but really trying to see this as two large economies, both have levers that they can hurt each other with. And both of them are playing that card. The difference, I think, is the U.S.'s card, semiconductor chips, is clearly aimed at China, Chinese companies. What China is doing is really more of a universal. That is, China says anybody who wants to buy our rare earths, these magnets, they have to fill out some forms. China gets information from that. China doesn't. I mean, does it really make sense if we say that the F fighter jets that the U.S. has need rare earths, and we're using those to maybe sell to Taiwan? Does it really make sense for China to sell those rare earths like that to us, to other militaries, if we're going to be clashing with China? So I think it's a complicated issue. I don't think, and I think that we want to know that there's a good guy and a bad guy. But I think in this context right now, that's not a very helpful framing of it. I do think that I think that it's just rationalist. Back in I want to say it was the late 80s, Dao Jinping, the reform leader of China, says the Middle East has oil, we have rare earths. Countries use their like comparative advantage, what they have with the points of leverage. And I think that those points of leverage are here to stay, and I just don't think that the capacity in the U.S. or in Europe or in Japan is sufficient to really challenge where China has something like 90% of the processing. So even if we get the rare earths in the U.S. and other countries, we send them to China to be processed. 90% of the rare earths are processed in China. We need to break that monopoly. And that's why I think valuation is a separate issue, but I do think that there's going to be a place for a rare earths industry in the United States.
Oh, it definitely looks that way. But look, these tensions, or at least this trend of China dominance in rare earth, this has been happening for a while. It just seems to be that Trump is now taking a tougher stance. And quite frankly, I think he's also really pissed off China so that they're digging their heels in too. But Mark, from the stock side of things, you have shared with us too that you hold some of these stocks. You have ridden them higher. Look, this is a bull market, I think we can say, for these stocks, a lot of metal stocks, but we're seeing some huge volatility. So, putting your investor hat on outside of the geopolitics here, what are your thoughts on how to trade these stocks in a volatile environment after they have gone vertical, now are correcting some fairly severely, but not even close to levels they were at just a couple months ago? How do you play a bull market like this?
Yeah, I wish I knew the answer. I know that the challenge, of course, is that as those rare earth stocks have rallied, many people have not adjusted, like reweighted their portfolio accordingly. I didn't. So that those rare earth stocks went from being a small part of my portfolio to dominating it. And that volatility is just unacceptable now. And so I think that what people typically do in a higher volatile environment is you've got to adjust your size, reduce your exposure in higher volatile. I mean, you think of it as a sort of volatility or money at risk. And the key to money at risk or value at risk, those kind of VAR models, is really like how volatile of an instrument do you have, and what does that do to your overall portfolio? And remember, there's a lot of tools that the institutional side has developed that we could use on the retail side, like Sharpe ratios, things that measure are you getting paid for that incremental more volatility or more risk you're taking on? Are you getting compensated for that? And so looking at trying to adjust your portfolio. So what people want is not just the biggest profits, but it really should be, we should think of it as profits, volatility adjusted or risk adjusted. And I think that we just have to keep that in mind. As the stocks go up, they become more, they get a higher weight in our portfolios, and then they become the dominant force. So I think it's just a difficult time, but I think that really, what we need to do is reduce our exposures, have smaller size to deal with the higher volatility.
Yeah, Mark, I think those are some sound comments, especially about risk-adjusted returns. It's not about all-out returns. It's about what kind of risk are you taking. But just one more point on this, just because we talk about rare earths a lot on the show and the sector I've been following for 15 years. When we talk about there not being processing, the reason the U.S. government invested in MP Materials is because they actually are producing rare earths and processing it here in the U.S. But a lot of people think they made a mistake, and this brings up the whole question of the government getting involved with stock picking because they didn't give money to, say, Neo Performance Materials, which is here domestically and is processing rare earths outside of China, or Energy Fuels that is here and is producing and processing rare earths out of China. And there's Ucor, Aclara, Cotec that are all looking at the same kind of technologies to process. So you got six companies there that we've talked about on the show before that are processing rare earths outside of China. Yet we keep hearing the narrative there's no processing outside of China. But the MP Materials went viral because the U.S. government got involved with it, but they also ignored all these other companies. So doesn't this create part of the problem with people valuing their own portfolios?
So I don't know. I defer to you. You have a greater sense of how much we're really doing, but it still seems to me that we're still doing on a very small scale. And what's really helping is that businesses have been building up inventory, and the Pentagon has inventory of rare earths and magnets. So I don't know. It still seems to me that we're light years behind China, and and which is the reason why those export controls got such a strong reaction from the U.S. The U.S. basically is saying that China is declaring war on the world. I don't quite see it that way, but I think that we need to really. I mean, there's talk, in fact, about having a warp speed like we did for the COVID vaccine, addressed to rare earths. The problem I have is that it's not something that we can buy overnight. We don't have the we don't have the education, the sort of the larger infrastructure to really do this on the scale that we need to become independent from China. And this includes not only college education and coursework and getting those scientists, but also think about the energy that we need, right? I mean, we're sort of still struggling with building, sort of carving out that energy footprint that we need in the US, not only for AI, but it's going to be for rare earths too. And I don't think that many of us think, oh, rare earths, well, we should do that. But the environmental cost of being able of doing that, people aren't taking into account either. I think it's going to take years for us to catch up to China. I hear what you're saying, Chad, that there has been some progress made. It still seems to me that we in the U.S. or in Western Europe, Japan, still in the very early stages of being able to compete with China, which is why China can play this card, why China has leverage, and we saw that over the summer with the auto companies. So I'm concerned that we have sort of a more like relaxed attitude about it. We should have been moving in at warp speed, like you say, 10 years ago.
Oh yeah, US is definitely late to this. I guess they're trying now to ramp this up, but yeah, you mentioned it. Environmental concerns and all the other concerns and all the other advancements that need to be made to truly ramp this up. Look, capital and government support will help, definitely will help here, but it's not going to be a tomorrow, next month, next quarter type of thing. This is going to take a long time to build up, which maybe leads to that whole narrative that this is a sustainable bull market, and who knows what the valuations could be if we do have the government truly get behind these companies and make it easier for them and make capital cheaper for them. We'll see how it all plays out. Let's move on to another big story from this week. Regional banks, Zions Bank Corp and Western Alliance Bank Corp, both having some bad loan issues. Again, dealing with commercial real estate. This is bringing up some of those fears of what happened to Silicon Valley Bank a few years ago, market reactions to that. These banks are much smaller than Silicon Valley Bank, but look, regional banks, should we be worried about what's happening?
But I think that this was like seen this week as a shot across the bow. I think that the issue is that both of these regional banks are really victims of fraud. Loans that were funds that were invested in distressed commercial mortgages. It's serious in the sense that it's true, and that the commercial real estate, I think many of people had like sort of forgotten about. There's been so many like bigger fish to fry, so to speak, that the commercial real estate loan market may have moved off of many of our radar screens. But here's what it looks like, and this is why the regional banks are so important. It's the regional banks that make the bulk of the real estate loans. In the U.S., regional banks account for those commercial real estate loans are about 45% of the small regional bank portfolio, while only about 13% of the large money center banks. And when we really dig a little deeper into that commercial real estate market, it's really you got to focus on the office loans. And that delinquency rate now is about almost 10.5%, which is basically back to those 2008 levels. And the thing that's looming for us still is that between now and the end of the year, industries estimates that there's about $1 trillion of commercial real estate loans that must be refinanced. And this is coming at a time when we just had the failure of a couple of the auto lender, Tricolor, and that auto parts supply company, First Brands. And so the market is a bit sensitive to this, partly because where we are in the big cycle, we're sort of in the late stages of the financial and economic business cycle, and so these kinds of accidents uh, are like at this stage in the cycle make people especially concerned, and this is coming, of course, at the time too when the level of reserves, those reserves that the banks have at the Federal Reserve, that they're falling as the Fed has done quantitative tightening, and we're now below $3 trillion, which is another late cycle characteristic. And so I think people are concerned about it. But on Friday, we did see the regional bank index rally, though it's still off for the week. It did have a bounce into the weekend.
Yeah, Mark, it's a strange reaction with my news feed being filled with a number of articles worried about and jittery about what this could mean for other banks if there's a contagion effect where there's a lot of banks with bad loans, or, some people were upset with Western Alliance claiming fraud, saying that maybe they just didn't vet the company correctly, and that there's probably a lot of banks that haven't vetted their clients correctly. And so but then the regional banks ETF is up on Friday. So it's a strange reaction. Do you think that under the surface, the commercial real estate, as you highlighted there, or some of these other potential bad loans are always a continuous factor with banks? I think it's interesting when they flare up in the media when there's probably an ongoing sea of bad loans or bad creditworthiness or misguided allocations in banks. Do you think that sometimes the media just likes to jump on something and hype it up when it's an ongoing issue with banking, and it always has been?
I think that you're right that banking is always about borrowing short term and lending long term, and it leads to these mismatches from time to time. But I think that there's a lot of other things that have moved onto people's radar screens. But the KBW Regional Bank Index is off for the fourth consecutive week, despite being up ahead of the weekend. 4 weeks in a row being down. And so this began then before Zion and Western Alliance acknowledged their challenges. 4 weeks in a row is the longest losing streak of the year. And so I think that it's like at least I think it should be at least a yellow flag, partly because of the implication that it has. And I think that's really obviously we haven't had much data this week given the government shutdown, but what we have seen take place is the market, partly because of this regional bank issue, the market has gotten very aggressive about pricing in Fed policy. The market now has about 26 basis points of cuts discounted for the end of this month. I know it sounds so close to 25 basis points. What's the difference? The difference is being on one side of that 25 line. Above it, the market's pricing in a small chance, but still a chance of a 50 basis point cut. For the December meeting, the market's got 52 basis points of cuts priced in. Again, the market has gone from not being sure the Fed was going to cut while the government is closed, there's no data coming out, to now the market is saying there's a chance that we get a 50 basis point cut.
That would be somewhat surprising. Although, look, the Fed did say that we could have two more rate cuts for the rest of this year. Maybe they front load it and we get them all at once. Mark, this is just a crazy end to the week here. Look, a lot of sectors have been doing well. The markets, I think, have lost a little bit of momentum. The broad averages, the US dollar has been climbing back closer to 100 on the dollar index, but it hasn't exactly been screaming higher, just more slowed down its general fall. What do we have to look forward to here? Does it seem like chaos is going to reign supreme in these markets? And again, even touching back on to more of the commodity sectors?
So I think that when I think about the commodity sector and the currencies, of course, people think about the dollar block currencies. But what's interesting is with the dollar block currencies that they're also really levered towards growth. And they also become more sensitive to risk off. So when we saw that big crash in the US stocks at the end of last week, we saw that the dollar block currencies, Canada, Aussie, Kiwi, got hit pretty hard. So I don't know. I mean, I think that broadly speaking, the dollar is finishing lower this week. The only currency that hasn't been able to get traction against the greenback is the Canadian dollar, which is typically the case when the U.S. dollar is soft. The Canadian dollar tends to be soft on the crosses. And the strongest currency this week has been the Swiss franc, which could be your safe haven type of currency play. So I don't know. I mean, frankly, a little bit confused with the short term, the choppiness of the dollar, and the fact that into this weekend the dollar is having a bit of a bounce. I'm not convinced though that this has been a trend change. And the way I would think about with the dollar index is that it put in a multi-year low on September 17th, when the Federal Reserve cut rates. We had worked our way higher and got, like you say, we got up to about 99.55 last Thursday, the 9th, before this last flare-up of tensions between the U.S. and China. We got down to about 98 almost on Friday before we bounced from there. So it's not clear to me, say, the next, say, 50 to 100 points in the dollar index. But I do think that the dollar follows U.S. interest rates. And when the market, what we saw on Thursday was that the U.S. two-year yield fell to three-year lows. The 10-year fell to its lowest level since April, below 4%. As the week winds down, we're moving back above there, but it still seems to be vulnerable. More bad news, and I really don't think that we've got two tensions, two like these stalemates, if you will. One is between the U.S. and China, and that can come to a head October 31st, November 1st, when President Trump meets President Xi on the sidelines at the APEC meeting in South Korea. What I found kind of funny was some media called it a summit, and it's precisely because the underlings could not get a deal worked out that there's no summit. That instead the two heads of the largest economies are going to meet on the sidelines of another meeting. And the second sort of stalemate, of course, is what's happening in the U.S. It seems to me that both Republicans and Democrats think they've got some advantage by continuing this government shutdown. I don't see an off ramp. Though the one bright spot might be for people who are hungry for economic data, is that because of our cost of living adjustment increases, especially for Social Security, the BLS will make the CPI, the September CPI report, available a week from now on the 24th, which is to say that despite this government shutdown, there's no government data. We're going to make an exception for the CPI next Friday.
Well, Mark, just as we look at this whole stew of information and we look at the China-US tensions, as we look at the Republican-Democrats tension with government reopening, these kind of news things tend to be, unless there's something really big that develops out of either one of them, they tend to be flashes in the pan and then the market moves on to the next thing. I guess just as you look forward at the sea of economic data we're not getting with the government shutdown, with earnings season underway and all of that coming in from companies, with people expecting cuts and maybe they get them, maybe they don't, with the global trade and the tariff issue kind of going to the back burner, but it's obviously still front and center, not just with China, but with the whole planet. You have all these different things vying for people's attention, but what do you think actually is important? What actually moves the needle? What is actually noise, that goes away in a couple of weeks, and what is actually the signal here?
I think you're right, Chad. There's oftentimes a habit people have of like looking for the next shiny object. And instead, I think that in my experience, and it's taken me a long time to come to this, is I think I have a disciplined approach, and I see a strong correlation between the US dollar and interest rates. So that means that if the Federal Reserve cuts interest rates like the market generally expects, say call it 50 basis points this year, another say 75 basis points next year, I think the dollar tracks US interest rates lower. I think that other countries, there might be scope for other countries. Canada's probably got at least one more cut, maybe two cuts that it can do. Australia looks like they can cut once or twice. Uh, the Bank of Japan, we've had some very weak economic data from Japan, both in Japan and in France this week. Some of the political uncertainty has been lifted. Next week, Japan is going to, the Diet was going to vote for the next prime minister, and it looks like it'll still remain in the LDP's hands, partly because the opposition could not sort of coalesce around one candidate. So we are seeing some easing of political tensions, but I think that for me, the number one cut, the number one driver of the dollar is the direction of U.S. interest rates. And I think they're still headed lower. Part, I think the U.S. economy is going to weaken. I think that Federal Reserve is going to cut interest rates. You have these financial concerns, these late cycle things we were talking about with the regional banks. So I'm still dollar negative. I don't think that, for me, it's also a question of a super cycle of like the dollar had been rallying from like roughly '08 to roughly 2022. So and the dollar's down move really doesn't get going much until this year. And I think we are still in the early innings of this bearish super cycle leg down for the dollar.
All right, we'll wrap it up here, Mark. Boy, oh boy, a lot for us to take in this week. Let's see what next week brings. But yeah, I think a lot of people scratching their heads at the end of this week, figuring out what they should do with their portfolios and what the direction is of these markets, especially with some of these high-flying metals markets that we like to talk about so much. If you want to follow along with Mark, click the link in the show notes. Visit the Mark to Market website. Read over his daily notes. Mark, great having you on the show. I hope you have a great weekend.
Good luck to everybody.